The 10th Motilal Oswal Annual India Ideation Conference will take place next week. To talk about their conference and how will the Indian market perform in 2025, we're joined by Rajat Rajgarhia, the Managing Director and CEO at Motilal Oswal. Hi, Rajat. Good morning. Good to speak to you after a while. Well, Rajat, tell us first, before we get to this conference, how are you feeling about 2025? Most on the street are suggesting it's going to be more of a difficult year. Do you think likewise, or do you think the recent pullback has provided some cushion that maybe 2025 will not be as bad?
Well, I think 2024 itself has not been bad. If you look at the large cap index for the year, it's up about 13-14%. Mid caps have done quite well, just that while they had a pullback, but they do allow some room for markets to catch up as we see more triggers. So I think 2025 should be a good year, decent year. 2024 has been another good year. We see no reason why things should not move up from here in 2025.
Okay. Rajat, hi. Morning. Great to be talking with you. So expand on that a little bit, because there is this whole debate raging on possible slowdown, just when rural is picking, urban is slowing, inflation issues here in India, whether the RBI will cut as much as the market wants or hopes. What makes you optimistic about 2025? And from a market return standpoint, is it going to be a 10% year? Could it be even better than that, lower than that?
Markets are definitely rallying around earnings. If you look at earnings, the moment August, September onwards, we started seeing slowdown, cut in the estimates. You saw pullback in the markets. I think where we stand today, 2-3 important trends are there. We definitely see the interest rates being a lot accommodative in 2025 from the beginning of the year. Come Feb, we do expect some policy changes to happen. So that provides a momentum for the rest of the year. Second, I think we have started hearing a lot of chat around government spending now picking up. That had its own share of impact on the slowdown, I think, in the first 6-7 months, that hopefully should catch up. And I think third, on the consumption side, the base has become low with inflation moderating, with this 45-50 lakh marriages happening. Some amount of pickup is likely to happen. We are already hearing that at least this December quarter is just a little better than the September quarter. And I think a lot of the estimates, both at the macro and at the corporate earnings level, that had to moderate has been done. So a lot of these things have got priced in. To your point on what 2025 should be, I would think at the broader market, a 10-12% kind of a year is good. But as last 3 years we have seen, it is a very bottom-up market right now. Pick up earnings which are growing, pick them at right valuation. There's a lot of money that people are still going to make.
Rajat, you said that December earnings are already looking better. At least what the early channel checks seem to be suggesting compared to the September quarter. So what have your discussions with corporates, investors thrown up in terms of the December earnings season this time? What should we expect?
So, if you look at September quarter, a lot of the consumption category companies had a negative volume growth from a low single digit to high single digit. I think at least December quarter, we are looking at that trend to at least get better to more like a neutralish kind of a quarter. In some pockets, you may see some volume growth coming up. Plus, I think globally, if you look at whether it is oil prices, other commodities, they have been very ranged to soft. And plus, if the government spending picks up, that is also going to make the entire cycle look better. So I think September was really a very, very tough quarter. In that context, December is likely to be better.
Okay. Rajat, so let's talk about then the themes that you would be most optimistic on going into the new year. Is it going to be more of the same, more of the capex and the manufacturing related plays, or is it a good time? We were just speaking with, by the way, Pankaj Tibrewal a while back. So he was talking about a lot of dark horse sectors. Just for your reference, he was saying watch out for the underperformers like cement, metals, even chemicals. So I don't know if you share that view or not. Basically, themes for 2025.
Every year at the beginning of the year, people do expect that a lot of the things that didn't work well last year, if any of those underlying business trends get better, stocks do make a big comeback. Last 2 years, we have seen how capex over consumption has performed. I think similar themes will be sought after in 2025. But I think three themes that as a house we are very positive on. First, capital markets. You guys would have seen we released a big report early this week with a coverage on companies across the value chain. I think this is not just a 2025 theme. This is a theme that you can play for 1 year, 3 year, 5 years. And this across space, right from an AMCs to intermediaries to other depositories, look fantastic. Second, I think as you start seeing the rate cycle becoming more accommodative, you will start seeing financials, more particularly banks, and in some case private banks, which will make a comeback. Consider that last 2 years, they have really not contributed much as a space. So your theme of both underperformance catching up and plus a very reasonable earnings growth at a very reasonable valuation makes them worth. And third, I think capex remains a theme because 18 months back when we had written a report, we had spoken about that as a 5-year theme. I think we are still into an early cycle of that. This cycle is only going to get better and stronger as the economy picks up. So these remain our three top-down themes, and there are multiple stocks within these three themes to play for.
Okay, all right, Rajat, we'll leave it on that note for this morning. Thank you very much for joining in. We'll take a break right now. On the other side, we'll have Mitesh Thakkar joining in for some technical ideas. Stay tuned.